Hey traders, what's up? Welcome back to the Forex Breakdown, your daily dose of market insights, real trading talk, and no sugarcoating. I'm your host, Mark Reynolds, professional Forex trader, market junkie, and your inside guy when it comes to decoding the madness behind the charts. Today is Thursday, March 27, 2025, and we've got a lot to unpack. We're gonna break down everything that moved the major Forex pairs today, key economic data that hit the headlines, how central banks played their hand, and, most importantly, we'll get into what you should be watching for the next trading day, Friday, March 28, 2025. Grab your coffee, close those trading terminals for a second, and let's get right into it. Alright, starting with today's recap, Thursday was anything but quiet. Dollar strength returns, but it's fragile. The US dollar index, DXY, popped back above 104.70 earlier today, riding off fresh data from the U.S. Labor Department. The weekly jobless claims came in at 205,000, slightly lower than expectations, reminding traders that the American labor market still has some muscle. But here's the catch: the dollar's rally wasn't as convincing as it looked on the surface. There's a lot of hesitation because traders know the Fed's next move isn't clear-cut. Powell's speech this afternoon didn't offer much more than the usual, data-dependent, script, and that's left the dollar bulls unsure if they can push higher. Euro to US dollar holds ground, but watch that range on the flip side. The euro spent most of the day trying to claw back gains. Euro to US dollar hovered around 1.0800, bouncing off support at 1.0765 but unable to break above 1.0835 resistance. The latest ECB minutes dropped this morning and, no surprise, policymakers are split down the middle. Some are ready to pause, while others are still talking rate hikes. That tug of war is why the euro couldn't really catch a solid trend today. Pound sterling to US dollar shrugs off weak retail data across the channel. The British pound took a small hit early in the session after the UK reported disappointing retail sales numbers. But by the time New York opened, pound sterling to US dollar found solid buying interest around 1.2580, closing back above 1.2625. Traders seem to be betting the Bank of England won't flinch anytime soon, even if the UK consumer is slowing down. Yen weakness continues, BOJ still a passenger over in Asia. The Japanese yen remained under pressure. US dollar to Japanese yen cruised higher, testing the 151.70 level. The Bank of Japan's Governor Ueda made some noise overnight, hinting at possible policy tightening later this year, but no clear timeline. Traders aren't buying it, at least not yet. As long as US yields stay elevated and the Fed doesn't blink, the yen is stuck in the passenger seat. Commodity currencies flat, but risks rising. Lastly, the Aussie and Kiwi pairs, Australian dollar to US dollar and NZD/USD, were mostly range-bound. Aussie struggled to stay above 0.6540, and the Kiwi held around 0.6025. The big thing weighing on both: China's economic data. Industrial profits out of China missed expectations today, which is never good news for commodity-linked currencies. Quick summary of today's big data points and central bank chatter. U.S. jobless claims, lower than forecasted at 205,000. Labor market still tight. U.S. GDP Q4 revision came in unchanged at 3.2%, no surprises there. ECB minutes, no clear direction, mixed hawkish/dovish tone. UK retail sales, disappointed, minus 0.3% month-over-month. Japan BOJ commentary, still hinting at policy normalization but no action yet. China industrial profits, missed expectations, bad news for AUD and NZD traders. Alright, let's talk about tomorrow, Friday, March 28, 2025. Here's what's on my radar and what you should be watching. 1. US PCE Price Index. The dollar's fate. The biggest data drop tomorrow is the US Core PCE Price Index, the Fed's preferred inflation gauge. It's set to release at 8:30 a.m. Eastern Time. If this number comes in hotter than expected, expect the dollar bulls to come back swinging. But if it cools off, that could be the trigger for a dollar sell-off into the weekend. Levels to watch: DXY, resistance at 105.20, support at 104.30. Euro to US dollar, resistance at 1.0835, support at 1.0760. Pound sterling to US dollar, keep an eye on 1.2660 as a pivot level. US dollar to Japanese yen, critical resistance at 151.95, support at 151.20. 2. End of quarter flows. Tomorrow is also the last trading day before the weekend and just 3 days away from the end of Q1 2025. That means we may see some unexpected volatility from month-end and quarter-end flows. Watch for big institutional players squaring their books. It can cause erratic price action, especially in low liquidity periods. 3. Risk sentiment, equity markets and geopolitics. Don't forget to keep an eye on equity markets. If stocks start selling off heavy tomorrow, risk-off flows could lift the dollar and the yen. Also, headlines out of Eastern Europe and the Middle East have been creeping back into the news cycle. Any flare-ups there could spark safe haven demand. 4. Technical patterns setting up. Here are a few technical setups I'm personally watching. Euro to US dollar, possible bearish wedge forming on the 4H chart. Pound sterling to US dollar, strong ascending channel support at 1.2580. US dollar to Japanese yen, RSI is showing overbought signals, possible pullback incoming. Here's how I'm planning to approach tomorrow's session. I'll be looking to short US dollar to Japanese yen if we see rejection at the 152.00 psychological barrier after the PCE data. Watching for a potential breakout in euro to US dollar above 1.0835 if PCE comes in soft. Staying away from the Aussie and Kiwi unless China headlines shake things up. One thing I'll emphasize, with month-end and quarter-end flow mixed in with major inflation data, tomorrow is not the day to overtrade. Keep your risk tight. Watch for fakeouts. Alright folks, that's a wrap for today's Forex Breakdown. If you found this episode helpful, make sure you hit that subscribe button, drop a rating, and share this podcast with your fellow traders. Tomorrow's trading session could get wild. Don't trade based on hope, trade based on facts. I'll catch you back here after the Friday close to break down how it all played out and what to expect for Monday's open. Until then, stay disciplined, manage your risk, and trade smart.